A broad-based fall across the Wall Street saw markets end at two-month lows. The Nifty sensex fall over 1.5%. The mid-caps underperformed. The index is down 2%. The BSE companies erased market capitalization of 7 lakh crore rupees in a single session.
State Bank of India rallies after beating estimates in the fourth quarter thanks to a 15% loan growth. On the other hand, Asian Paints declines after missing estimates. L&T also declines despite meeting estimates in Q4 as it leaves the street disappointed with its margin outlook for the current year.
Auto stocks bat for the bulls after TVS and Hero MotoCorp deliver numbers in Q4. Shares of gold financiers like Muthoot and Manappuram tumble after the RBI sends a stern warning on capping cash loan payouts at 20,000 rupees. The Muthoot management believes there will be no disruption. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points with regard to today's action and gear you up for tomorrow's session as well. I'm Nigel D'Souza. Joining me as always, Surbhi Upadhyay. Hey Surbhi.
Hi Nigel, I hate to sound repetitive, but a disappointing day once again for the bulls. And the reason why we're calling it disappointing is that the sell-off was across the board and there was absolutely no sign of recovery today.
Well, that's right. And the problem was today we went ahead and we broke that crucial level. On the downside, the 22,200 odd mark, that got taken off. We've been talking about this range of 22,200 to 22,750. So the lower level got taken out and the last tick was at the low point of the day. That's not such a great sign, right? The Nifty Bank as well, it's decisively broken the 20 DMA now, and it ended closer to around the 50 DMA. So that's a bit of a worry factor as well. Ended around 50-60 points below the 50 DMA as well. And now all eyes on the 100 DMA, which is at around that 47,100 odd mark. So the Nifty Bank, that's been the relative underperformer. There were a couple of big earnings disappointments as well. And large names. L&T, well, the margin guidance wasn't great. The order inflow, well, that was par for the course, but the street latched on to that weak margin guidance. And given that we are in an election year, there were some signs of uncertainty. So that stock from the word go was down 4%, ended down close to 6%. Asian Paints commentary was weak. Margins as well were a bit of a disappointment. And they're sounding a little bit skittish. Remember, you have competition as well in the industry. So that stock as well ended at the low point of the day. The Lone Ranger actually from the larger cap names from the Nifty that did do well was SBI. Those numbers look classical. The worry on the street is always whether they need to come out to the market and raise some fresh capital. The management says they don't. The NIMs look better. Loan growth was good and asset quality was fabulous as well. So that stock in an otherwise weak market actually ended at the low point of the day. But Surbhi, I just spoke about the large cap names, the Nifty Bank. There was pain in the broader markets.
Oh, yes, and that's become such a pattern now. And once again, like we've been saying, it was such a wide, all-encompassing fall. The market breadth was weak from the word go, and there was just no recovery to that, the breadth that we're talking about. Nearly 2,000 stocks declining by the end of it, and just about 350 on the advancing side. That explains how wide and how deep this fall really was. If we talk about the mid-cap index, it was down about 2%, so outpacing the declines compared to the large-cap space. Now, from the top, if we start tracing this fall, the Nifty is down about 3.6% thereabouts. The mid-cap index is already down 4.5% from the peak. The small-cap index is even worse. It's down nearly 7% from the peak. And, the word on the street is that a lot of this is election-related profit-taking, nervousness leading to that profit-taking, which is what we are witnessing. I just want to end with one more data point here because we also got the mutual fund report card for the month of April. And tell you what, mutual fund investors are also being smart about their allocations because money has been moving, away from the equity side of the market. Look at those bars declining. The net equity inflow number actually came down to sub 19,000. So we're talking about, near 4-month lows there. And that money has been moving to hybrid funds, which give you both equity and debt, a mix of that. So that kind of repositioning also important to keep in mind. But of course, we've got lots lined up for you, more analysis and lots of stock-specific action. So let's tell you what we are covering. We'll, of course, kick it off by telling you about more granular details on today's price action and the stocks that fell and the ones that managed to buck the trend. So that's coming up with Vivek, as always. Then, of course, lots of individual stocks that we'll focus on. SBI, Asian Paints, L&T, all in focus on the back of results. The auto sector was the only green island, so to speak. So what are the drivers? We'll talk about stocks like TVS Motors, Hero Moto, and how the market has viewed those numbers. And of course, last but not the least, as always, the events to watch out for tomorrow. But first, let's look at this price action. It was really telling on the way down. Vivek, red day.
Well, you're absolutely right. Struggle to find some gainers, despite the fact that some of the companies that did come out with Q4 results actually were a strong set of numbers. So first on the list of gainers, if you're looking at the market, SBI, very good set of numbers, above what the street was anticipating. Despite that, cooled off from the day's highest point, ended higher by over 1%. The next stock was SKF India. From the broader end of the markets, declared its results yesterday. This particular company managed to see a significant margin expansion. So despite a weak market, the stock up over 8%. The other stock was Vijaya Diagnostic. Again, strong revenue growth, margins maintained at over 40%, and very good commentary coming in the conference call as well. On the back of that, stock ended higher by over 7.5%. And TVS Motor, the last stock as far as the gaining pack was concerned, strong margin guidance, the stock up almost over 3% in the session, and this is on the back of a stellar outperformance that the stock has seen. But now we are coming to the list of stocks and the stocks that took it on the chin in today's trading session. L&T, the top laggard as far as the Nifty was concerned. Everything about the results was good, except the fact that the margin guidance that the company gave for FY25 was weak, and on the back of that, over 6% lower today. Private banks, the entire pack today sold off, offsetting any gains that SBI saw. So IndusInd Bank, HDFC Bank among the top laggards. When you're talking about the next stock, Tata Power, weak set of numbers in terms of internals. So when you're talking about coal prices, that is something that went against the company, almost 5% lower. Asian Paints, again, a weak set of numbers, a margin miss, pricing weak, and on the back of that, the stock ended lower by almost 5%. And lastly, Manappuram Gold Finance. So Gold Finance sold off on the back of worries of RBI going ahead and restricting cash dispersals, and on the back of that, almost 8% lower as far as Manappuram was concerned.
Okay, Vivek, thanks a lot for that. Well, let's welcome our guests. We have Ambareesh, Baliga and Nagaraj Shetti of HDFC Securities who join us. Hi, gentlemen. Thanks a lot for joining in. Well, Nagaraj, you go first. What do you make of today's trading action? We were talking about the 22,500, then 22,200. Today, the last tick was at the low point of the day. So where do we find some kind of support? Because we still got quite a few sessions before we get the results of the elections.
Hi, good afternoon, Nigel. Nifty has been in a sharp downtrend recently. And in the last 2 months price action, if you see, market has been in a larger range bound action at the higher levels. 22,800, 22,600 to 800 was the resistance. At the lower levels, 21,700, 750 was the support. After hitting the new all-time highs, the Nifty is now nearing crucial lower support as well as the lower range around 21,750, 700 levels. I'm expecting, having declined in the last 5-6 sessions, I'm expecting a minor upside bounce from the lows of around 21,750, 700 levels in the next few sessions. But whether are we going to sustain the upside bounce is going to be crucial, and we are likely to see some good upside bounces. If we manage to get some upside bounces, then we could see some head higher. Otherwise, there is a possibility of Nifty rebounding below the supports.
Okay, all right. Thanks for that, Nagaraj. Ambareesh, we come to you with regard to some stocks. For the time being, let's get to the first stock that we want to discuss. SBI came out with a set of numbers and it looked absolutely stunning. Abhishek joins us to fill us in with a quick analysis. Abhishek, take it away.
Well, strong loan growth in SBI has aided in their numbers beating our poll. So deposit growth is 11% YOY and about 3.5% quarter-on-quarter, largely in line with analyst estimate. Advances growth was 15.2% YOY and about 5.1% sequentially. Even in the previous quarter, they had grown by 5% quarter-on-quarter. So despite that, there is a strong growth that they have seen this time around. YOY, the growth is at 4-quarter high, and sequentially, it's the highest in last 8 quarters. This is led by the corporate portfolio, which grew by 16% YOY and about 11% sequentially. Annualized slippage ratio is the lowest that you are seeing in last 4 quarters, coming in at 0.43% versus 0.57% sequentially. So asset quality has improved and it's one of the best that you are seeing in last 9 or 10 years. Gross NPA ratio has declined to 2.24% versus 2.4% in the previous quarter. Now, net interest margin was expected to actually reduce on a sequential basis, but net interest margin has expanded to about 3.28% versus 3.22% in the previous quarter. best ever return ratios that you are seeing with respect to ROA and ROE. ROA on a quarterly basis is at 1.36% and ROE is at 20.3% for FY24. Watchlist has also declined sharply by 20% quarter on quarter and one of the lowest in last 29 quarters at about 0.09% of the book. Cost to income ratio or operating efficiency is one of the best that you are seeing in last 5 quarters. The cost to income ratio is now down to 51.3% versus 60.3% in the previous quarter. So the PNL, both the ANA and PAT is a beat on our poll. Back to you.
Okay, all right. Abhishek, thanks very much for that. Let's look at Asian Paints as well. While SBI was positive, Asian Paints results didn't quite go that well down with the street. In fact, the numbers were missing street estimates across most parameters. Net profit rose marginally, while revenue slipped less than 1% on an annual basis. The company also reported domestic volume growth at 10% versus CNBC-TV18 poll of 8 to 10%. So the problem wasn't with the volumes, but it was a top-down miss. Revenue and then everything below kind of was below expectations. The management said that revenue was impacted by weak demand and down trading in the premium segment. They added that price cuts that were implemented in the last few months had an effect on the Q4 numbers as well.
Okay, let's focus on the other disappointment. L&T, that slipped more than 5% despite an inline set of numbers and a strong order book position. However, the firm guided for weaker than expected margins. Vivek joins us to dissect those numbers. Vivek.
Well, if you see the stock price movement of L&T today, you'd assume that it was an howler. But actually, if you look at the set of numbers, especially for FY24, it was actually a pretty good set of numbers. However, the only disappointment being the company guiding for a flat margin guidance as far as FY25 was concerned, versus the market expectations of some improvement. But let's have a look at some of the key data points that analysts were tracking, which led to a lot of EPS cuts coming in as far as estimates were going ahead. Order book very, very strong. Consolidated order book at 4.75 lakh crore, up 20% on a year-on-year basis. Order inflow was up 31% on a year-on-year basis. A handsome beat to what the management had earlier guided to at the start of FY24. Now, looking at the guidance check, revenue growth was over 20% of FY24. The guidance was just about growth in the range of 12 to 15%. Core EBITDA margin guidance was given in the range of 8.25 to 8.5 at the end of Q3. Earlier, it was 8.5 to 9. At the end of FY24, the company managed to clock EBITDA margins of close to 8.2, a slight miss, just a 5 basis points miss. But however, what is it that underwhelmed the street expectations? Core EBITDA margin guidance for FY25 came in at 8.25, which is flat on a year-on-year basis. However, the street was anticipating some improvement over there and expected it to move higher to 9%. And this has led to a couple of EPS downgrades coming in. So Jefferies, maintained its buy stance, but cut the target price to 3,970. They're saying that the prospect pipeline is quite strong at 24% growth seen on a year-on-year basis and gives upside surprise scope potential for management's 10% order inflow guidance. CLSA2 has a buy stance, but they also have gone ahead and cut the target price to 4,151. They're saying that the FY25 guidance actually drives both in inflow as well as execution. However, low margins is a bit of a disappointment.
Okay, all right, Vivek, thanks very much. I liked how you put it, that if you saw the stock reaction, you thought it was a complete howler, but that's not really exactly how it played out. Ambareesh, so what do you make of it? 3 big numbers, Asian Paints, L&T, down reaction, SBI relatively better off. What's your advice? I mean, either one or, talk about all 3.
SBI clearly better than estimates and with the sort of growth in profits which we have seen about 24%, asset quality has improved. So I think people should utilize this fall in the market to in fact buy SBI in case it corrects, because in fact I have a target of about 920. So if SBI corrects by about 3 or 4% from these levels, clearly it's a buy. It's a buy even at the current levels, no doubt. And when we're talking of L&T, if you look at the history, whenever the management has been cautious, L&T has bounced back within a quarter or two. So I think we should utilize this as an opportunity. It's corrected decently well. So I think at these levels could be bought. I don't see much of a downside from here, maybe another 100, 200 rupees more from here. Whereas the upside which I see for L&T is about 4,200 over the next 6 to 8 months. So I think it's a decent time to start buying L&T at this point of time. And if you're talking of Asian Paints, yes, it's been disappointing, no doubt. But then if you look at the past, close to a year, Asian Paints has underperformed. So with these sort of earnings, I really don't see much more of a fall from here. But then the question is, when does it bounce back? So for the time being, I'll just wait out.
Okay, all right, got that, Ambareesh. Let's focus on the two-wheelers. Last year the two-wheeler industry grew by close to around 14%, but they're still 13% lower than what we saw in 2019. In today's session, though, the stocks were on fire. TVS and Hero, both of them delivered good set of numbers. Sudarshan joins us to fill us in with a quick analysis there. Sudarshan.
So in today's week session, one sector that has outperformed, that is auto, and especially two-wheelers, after TVS Motor and Hero MotoCorp have reported earnings which were better than earnings and significantly higher against the same quarter last year. Even outlook is healthy. So first, talking about Hero MotoCorp, margin remains about 14% and it's up almost 100 bips year on year. And company says it sees multiple tailwinds for the sector over the upcoming quarters and it will be driving market share gains. TVS Motor has reported margin of above 11% for third straight quarter. It's at 11.3%. And company says EBITDA will continue to improve quarter after quarter and two-wheeler industry to see a healthy growth this year and will see better recovery from the rural segment. Talking about the brokerage views, Jefferies says it has a buy call on Hero MotoCorp with a target of rupees 5,650 per share, and it says EBITDA per vehicle has risen 5% sequentially to a new high, and two-wheelers are poised for strong double-digit growth over next 3 years, and it sees 17% EPS CAGR over FY 24-26. CLSA has an outperform rating on Hero MotoCorp with a target of rupees 5,280 per share. It says rich product mix and reduction in raw material costs impacted earnings positively. Coming to TVS Motor, Bernstein has a market perform rating with a target of rupees 2,050 per share. It says Q4 results are on expected lines, but volume has been a key driver and it's a preferred pick and stacks up after Bajaj Auto in the pecking order. Jefferies has a buy rating on TVS Motor with a target of rupees 2,525 per share. It says company will be a key beneficiary of two-wheeler demand revival and EPS has more than trebled in last 3 years and expect it to more than double in next 3 years.
All right, got that. Thanks very much, Sudarshan. That's how we call him internally. But yeah, really the auto sector was the only space which offered a little bit of green to the eyes today. Let's move on. Next on our radar are gold financiers. Now, non-banking financial companies are in focus after receiving an advisory from the RBI telling them to strictly adhere to the Income Tax Act provisions on cash disbursement limit of 20,000 rupees. We spoke with George Alexander Muthoot, Managing Director of Muthoot Finance, on the RBI's latest advisory. Here's what he had to say.
This is actually not any selective instruction. It is a universal instruction applicable to all NBFCs, whether big, listed, unlisted, any NBFC, this is applicable. Because 80% of customers even pay their interest occasionally through the bank channel. So it is not we don't see it as a challenge. And next second part is, if they are not going here, where else are they going to go? Because all NBFCs, this is applicable. Those numbers are very minuscule and we will have no difficulty there. So I don't have any numbers there. There's nothing significant.
Okay, all right. Well, that was the other big stock of the day. Well, we'll thank our guest, Ambareesh, as well as Nagaraj for joining in. Appreciate it, gentlemen. For the time being, though, we'll slip into a short break. On the other side, we'll tell you all the events to watch. We'll also get you a sense in terms of what went on the Lal Street.
What the buzz is out there, Nimesh?
Well, there's been a sharp sell-off in the market today, and some crucial, nifty technical levels got broken on the downside. But equally, the PCR had fallen below 0.7, so need to see whether we bottom around the 0.65. But in terms of individual stocks, the first stock on my list is Nuvoco. That's been consolidating in a very narrow range. Actually, it's been a big underperformer as well. The Citi is anticipating a large block deal very soon in that particular name. The second stock is BPCL. While the stock was under pressure today, all eyes will be in the earnings and the bonus issue. But there were buy flows at a leading FI desk in BPCL, so expect high delivery volumes in that particular stock. The third name is ITC. Even that stock ended at day's low, but towards the end there was a MOC buy flow, is what I understand, at leading FI desk. And the last is Paytm. In a weak market, that was buzzing in trade on large volumes as well, locked at 5% upper circuit. And the feedback is maybe some HN indices back in Paytm at these levels.
Thanks for that, Nimesh. Well, before we wrap, let's bring you all the key market events you need to watch out for. Ekta joins us to fill us in with that list. Ekta?
Thanks for that. Well, I'll start with all the global events. We have UK GDP, China CPI, ECB. There are a couple of speakers speaking there. We have Bank of England, a couple of speakers speaking there as well, and from the Fed. So there will be a lot of commentary with regards to central bank members talking about policy. Now, India, we have the IIP for the month of March, which will be released tomorrow post markets. In terms of results, it's a result-heavy day. Cipla, Eicher Motors, Tata Motors, Bank of Baroda, Bank of India, Dr. Lal's. AGM, Colgate-Palmolive will be holding its AGM, and a couple of stocks are going ex-dividend as well. HDFC Bank, UCO Bank, Transformers and Rectifiers, Bank of Maharashtra, DCB Bank, to name a few.
Okay, all right, got that. Ekta, thank you very much for the action. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side.